What's up? How you doing? It's been an interesting ride the last 3 hours, 4 hours. Very interesting indeed. We've come up and made a new high for the year. $23,816. How you doing, Lex? How you doing, David? Hope you're doing well. This pullback though, damn. That was rapid. Big rapid pullback. Let's see what percentage that is from the high. A 4.2%. 4.2% pullback from that high point. To which we have recovered how much? To which we have recovered 1.73%. Oh. So we're approaching the daily close. I feel like this daily candle, I mean, obviously it's all over the place. If we go to the daily chart, daily time frame, there's a lot of, thanks to that move back down, a lot of wick that we're dealing with here. So sell pressure, right? I'm going to go into a few more things, but first of all, let me just grab the link to this stream and post it on social media. It might be a quiet one today as far as the stream goes, because a lot of people might be busy trading. So I don't know how many people are actually out there looking to do anything on YouTube. But nonetheless, let me grab that link and I'm going to post it up onto Discord and also Twitter. So if you do want to get announcements for when I go live, if you haven't already subscribed and you get the bell notifications, you can get these notifications via Twitter or via the Discord. So I'll just put this up. Announcements. So we got a new high for 2023. Very cool. We had a very nasty pullback off that high. And we're still dealing with it. We're still seeing if this is a new trend down or whether this is just a pullback, ready for the next leg up. But I mean, there's going to be some things we talk about that suggest that maybe this whole move has been exhausted and we do need to pull back to rebalance and reshuffle. However, that doesn't always necessarily mean a big price correction. It could just mean a correction by time. So like a time type correction. All right, I'll just, let me get that tweet out. Won't be a moment. I'm gonna add in my hashtags. See if we can get some people to pop in that haven't popped in before. Put that hashtag list, here we go. There we go. All right. All right, let's dive into it. Let's get cracking. So yesterday, today it is the 26th of January in Australia. Thursday, 26th of January right now. So Wednesday, so today's candle that is about to close started back here. We're there. So I just want to get a bounding box around that. Let's get boundaries on that candle. So it starts here and it obviously ends soon. I'll get the price is accurate too in a second. I'm just gonna get this into the right spot. Okay, there we go. Now the prices are up here. I'm gonna snap it to there. And then the low is here. So then we'll drag it back to the same spots in time. All right, now we got time and price identified. That's today. Very nice volatility and movement compared with yesterday and the prior day. So the last day we sort of had this much movement was kind of our Friday leading into the weekend, the Saturday candle. So yeah, it seems to be like the theme, you know, off the back of the weekend into Monday, Tuesday, we seem to like consolidate and have little to no activity really. And then our bigger moves come at the back end of the week, like your late Wednesday, your Thursday, your Friday, you know, you start getting the movement. And this is sort of like a trend or a characteristic that I've pointed out before in my streams. So let me just adjust this music down a touch. There we go. All right, so where to from here? Like, let me show you, I'll delete that now that we can see the range. We want to check out the oscillators. So let's go into here and we'll start on the weekly. I'm going to hide the drawings for a second, just so we can see what we're doing. So on the stochastic RSI, on the weekly, you can see we are quite elevated. We have not done a stochastic cross back down yet, so that hasn't happened yet. But it's no doubt elevated, right? Your standard RSI, whoops, that is not quite even in the overbought yet. This is like heading up just above neutral for now. So that's still looking okay. Now CCI, I've never really used that indicator. It looks similar to an RSI, but yeah, whatever. I don't use it, so I'm not gonna talk about it. Nor do I know what it's about. But I'm sure it's it's not rubbish. It's just one of the oscillators that I don't use. So it just, now the way that I got this sort of like layout set up, you just click these boxes up here, indicator templates. And the free version of TradingView should have this too anyway, but you can click these default templates. Like these are just the default indicator settings, like templates that you can use. Now, recently, thanks to Static's help and encouragement, I finally got TradingView Pro, so I can show you stuff a bit more freely now, like without having to worry about having a limit to only 3 indicators. I think I've got 5 now that I can use, so that's cool. Now let's see, I've got, so oscillators. I'm gonna just close the CCI because I just want to focus on RSIs at the moment, the regular and the stochastic. So on the monthly time frame, let's start there. We can see that Bitcoin has come down and, headed into this really oversold territory for stochastic. Now for RSI, like the standard RSI, we're still, in the usual RSI range on the monthly. There's no oversold yet. So I don't know if that means that we have further pain to come, but I think it's the lowest the RSI has been. Let me open up a longer chart. Let's go to like the BLX or something, or the Bitcoin index. I'd have to go to my red list here. Here we go. Let's bring those oscillators back. We'll turn off the CCI and just focus on the stochastic and the RSI. A bit shorter. And I'll just change this so that we can see it. Okay. All right. Now, monthly, I think we were on. Yeah. So this is Bitcoin's history. I'll go logarithmic so you can really see what's happening. you can see that RSI tends to bottom out, like the stochastic RSI tends to bottom out at this kind of level. And you can see, like, some of the times it does extend for quite some time. Like there's a period where it does, you know, travel sideways for months on end, right? That indicates the bear markets. We got the 2014 into 15 bear market, the 2018 into 19 bear market, and then now our 2021 into 2022 bear market. So repeating a 4-year cycle kind of thing, right? 4 years, 4 years, 4 years. And then there was this little pullback here, a little baby pullback, but anyway, can you see what happens when stochastic crosses up the way that it has on the monthly chart? Can you see what kind of activity we get, you know, after we pull out from that low on the stochastic? It goes up. See? Look, up, up, up. What's next? Do you think we're going to go down when stochastic is so oversold? I don't think so. I think the next leg, if we're going to continue this behavior, can we stay flat longer? Yes, of course. So, you know, we could see another 6 months of the stochastic just, you know, doing this. You know, it very may well do it for the rest of this year before we actually prop up. Very possible. But my bet is that we're near some kind of market floor. I'm just going to go ahead and say that. You know, it's kind of, you know, there's probably a few more things that people like to see before you call like the bottom. But for me, you know, you don't want to be waiting forever. You don't want to be waiting for something crazy. Oh yeah, there's no doubt we've been in a bull market since. Let me just see. Let me get my I've got my dailies here. We'll go back to regular view and go to the daily chart. Okay, this point here, this crossing of this yellow line, this is the. Let me just hide these, because I want to just focus on the 200 daily simple moving average. I take this as the switch. This takes you from bear market to bull market for me. When you get above that 200 daily simple moving average, you know. So this to me here, when we popped below the 200 daily simple moving average, that to me spelled, okay, bear market time, you know. And then this whole section here is like the crypto winter, you know, the flat, boring, sideways. You know, there's levels down inside of this, but for the most part, it gets so flat, the volume drops right out. Yeah, it's not fun. But yeah, I mean, everyone's different. Like, there's a few people that will define it differently, bull or bear market. But for me, this is the recipe for the start of a bull market. Can it fail? Can we get like a false start? Yes, we can. We could be just doing a relief rally like this, right? We could get a mini bull market just like this, or we could get like a little false start just like this. This one was interrupted by COVID, by the way. So this was starting to look like a nice clean break of that 200 daily. But then we had a black swan event and we dipped straight back below it. But once we got up on top, you know, once the conditions in the economy provided the opportunity in the setup, then we got that nice run. So let's go back further. I'm going to go logarithmic so we can see it. Just trying to see like other bull bear cycles. So here's a bear, the 2018 bear market. This bull run was multi-year. This started in October of 2015, and it didn't cross back below until the 3rd of February 2018, with the top of that market obviously being up here at 20K. So all of 2016 was bullish, all of it. Like if you bought in January and sold in December, you would have made money. you know, the whole year. So 16 and all of 17 were awesome. Awesome part, awesome trend. We haven't been on a 2-year trend like that for a long time. We kind of did one like this, the run from this low, but boy was it volatile. Like there was a lot of volatility. You can see, you draw a straight line from the low to the high. We did all sorts of movement above and below it, didn't we? We got all over the place. But if you take a look at the, you know, the entire move of this one, this is a lot more linear, you know, from the break point to over here, like to the high. Wait, let me get the low to the high. So something like that, right? It was a bit more of a steady climb, like it was all one-sided kind of thing. Different structure there. Now let's go back a bit more. Here's another bull cycle. And then here's the brand spanking new Bitcoin beginning, right? Or like back at the dawn. But yeah, that's the 50-day, guys. That's the 50-day simple moving average. Sorry, 200, my bad. 200 daily simple moving average. Boom and bust cycles. So us cracking up above that, I think is pivotal. We just had the daily close. Let's check out, let's zoom in a little. How did we go for that daily candle? It has a lot of wick on top. There's a lot of sell pressure. More sell pressure on the top side than there is buy pressure on the low side. But yeah, let's see how this brand new day plays out. This is our Thursday candle. Just begin. Go back down to the hourly chart. Turn it off logarithmic. So yeah, this was very interesting. The Tesla earnings came out, and then this happened, this massive pump. But then we gave it all back in the space of an hour. So yeah, huge volatility, lots of volatility. The pullback, while it was scary, it hasn't changed my overall like optimistic look of the trend. Like here's the trend on the 1 hour, right? That Tesla earnings candle was pretty vicious, violent up move, but by no means have we started crashing. You know, we haven't lost the 200 hour, the 200 simple moving average on the hourly chart. I think we're probably like way elevated on the 4 hour, and you know, the daily we've only just freshly crossed it. Now the weekly, we have not quite even come up to test that yet, but I think a test of that may be on the cards. So that would take us, you know, if we were to do it today, or this week, the rest of this week rather, 4 days left of this week, if we were to come and achieve that by this week, it would get it to $24,708 roughly. Let me just see. Yeah, 24742. 24,742. So if I go back here, see, we want to cycle down through the time frames here. So we're above, obviously we're above the 200 on pretty much every time frame except for the 5. Oh wait, the 1 minute. Okay, the 1 minute we dip back below it a little bit activity below that. But now we're trying to reclaim support on top of it. You can see we attempted it here, and we sort of initially held, but yeah, we lost it eventually. So we're back below. See, this is some way to pull, you know, trend sentiment on charts, like no matter what time frame you're on. But the 200 simple moving average, you know, when price is above it, generally that's up bullish, uptrend. When price dips below it, you generally start, you know, some kind of retracement or downtrend. So now trading on the 1 minute, you know, some people are good at it, some people are bad at it. I'm bad at it. I'm not that great at scalping the 1 minute, but it can be done. I use this setup here. This is just like a little. So this is my daily EMA indicator group. So indicator template. So when I want to look at the dailies for golden crosses and death crosses, this is where I come. So let me turn off the moving averages and look at just the EMAs. So you can see death cross EMA, golden cross EMA, death cross, and it's starting to curl up for the EMAs. We're gonna see if we can get that golden cross soon. It hasn't happened yet, but a daily time frame golden cross would be epic. Like, it's on the cards, right? Relief rallies can get golden crosses. Look, this is our relief rally from 2019. We pulled in a golden cross. So yeah, we haven't even started yet. You know, if we're gonna get a relief rally, let's get something like this happening. Anyway, now there's some people argue that it needs to be a 50 EMA and a 200 SMA. So let's do that. Now that's the 200 MA. Let's get the 200 MA. Wait a minute. That's the 50 MA. There's no labels. Sorry. Let me sort this out. Now the EMA. That's the 200 EMA. We don't want that. We just want the big slow one. The 200 simple moving average and the fast exponential moving average. So we've got a 50 simple moving average and a 200. Sorry, let me repeat that. We have a 50 exponential moving average in orange, and we have a 200 simple moving average in yellow. Now, I've heard a lot of people say that's how you read golden crosses and death crosses. So, death cross from back over here. This was when I was calling 2021 bull market beginning because of the death cross on the daily. And then people were like, nah, it's not going to happen. We actually found support at 30K and did something that Bitcoin hasn't done before, which was cross back up within the same year to set in a brand new all-time high. So this was our first, you know, Wyckoff distribution type market top, because every other top, I believe, has been a blow-off top like this. Blow-off top, blow-off top. What other ones do we have? Blow-off top, blow-off top. Another one there. Whoops. There. And any others? Yeah, you can pretty much see Bitcoin likes to do the whole blow-off top thing. But this time, the most recent bull market, we had a double top. So different, way different. So there's a first for everything when something is so new like Bitcoin. Now, I'll catch up to the comments in a second, guys, but I just wanted to have a look at some other more sensitive time frames. So this is the daily. We're looking at maybe getting a golden cross soon if we stay positive. And then that's when the party really gets started. If we can get a golden cross and maintain it, we'll see. Now the 4-hourly chart, see how it's more sensitive. You can see we golden crossed back here on the 10th of January. So if you were paying attention to the EMAs, like to this sort of like way of trading on the 4-hour chart, you would have caught this move and you would still be in it. You would still be riding this trend up. You know, there's no price hasn't even come back down below the 50 EMA on the 4-hour time frame. Now let's check the 1 hour. So even the 1 hour sets you into a really nice trend. Look at this. This gets you in even earlier. This gets you in on the 4th, which is interesting. Because, you know, the higher time frame, the 4 hour, it needs more confirmation, like more time to turn around and get a signal. So the 1 hours came in a little earlier, which was cool. I'll show you where it popped in there. So basically through this structure here, down when we were at 16.5, 16.6. So yeah, trading off the 1 hour crosses could be a thing, you know. I think this was CPI. It came up. Oh no, wait, no. I lie. This was CPI over here. When we came up here. Fed funds rate was released as well. Tapped out. Retracement. Death cross. Golden. Death. Golden. So we've been golden for a long time. But when we start getting death crosses, that's when you're like, oh shit, okay, like the temperature is changing in the market. I better think about closing my longs or opening shorts, you know? Look at this signal here. This is the FTX collapse. This sort of got you into a short in a very comfortable area, like probably like through this little consolidation here. And obviously there was a big pump here, which was scary for anyone that went short in this zone. But for the most part, that death cross played out beautifully. The death of FTX, right? But yeah, it can get noisy. Look at how noisy it is through here. It's disgusting, right? It's ugly. This is where you don't trade in conditions like that. I like trading the chop. I'm not good at it. Other people are, but you know, I'm not good at it, so I'll leave that alone. You know, I prefer to trade in more committed environments, like where there's a more obvious trend, I suppose. So that's the 1 hour. That's cool. Let's go down to a lower time frame. Let's go to the 15 minute, and see how it behaves. Kind of awkward. Not great. See if the 5 minute does anything for us. Yeah, somewhat. I feel like the 50 and the 200 are good for high time frames. I think you need a different setup for scalping the shorter time frames, like the 1 minute chart, right? The micro time frames. But yeah, that's EMAs and MAs. Now let me backtrack here. I can go through the comments. DC Woodworking, what's up, man? Philip Harper, happy Australia Day. Thank you, Philip. Aaron Inabs, hey all. Jack Rick is calling bull market. I have FOMO'd all in. Yeah. Honda Land. I personally lengthen my stochastic RSI on all time frames like that, so it will be 300 for the stochastic for me when it's something like the daily. Oh, cool. This will rid the indicator of all its noise. Awesome. I'm gonna see if I can figure out what you mean by that. Let me see. Oscillators. Let's go into the settings of the stochastic. So you have 3, 100, 100. Oh, okay. Let's see what that does. Oh, spicy. All right. You get a lot of crosses though, ups and downs, don't you? Interesting. Yeah, I've never seen that like adapted that way. This reminds me of Batman color scheme, black and yellow. Black and yellow, black and yellow. All right. We'd still be in the land of the crab. 100%, Jack. I am trying to remain calm and not get too excited about the price movement. But yes, we could still be in a crab market. You know, a more macro looking crab market. Like, and that's probably the case, you know, to be honest. Like, to be quite honest, this could just all be one big old fat range that we're in. And I'll draw a box around what I'm talking about. Like this. Something like that, right? This could be the crab of 2023. But hey, look, it's still profitable. Because look, moves to the top of the crab, to the bottom, they're big moves. Like, look, measure that out. That's 58% up and 38% down. Like, if we can swing, if we can oscillate through this rectangle, that's very tradable, you know? There's still a lot of money to be made in flat sideways markets like this. You know, if you know, if we get the volatility. What we don't want to see is get us stuck in a range like this, you know, like the post FTX crap that we went through. That's a very tight range. A crypto winter, if you will. So I guess the point is, who cares if we go down? Who cares if we go up? We just want this kind of differential in price. We want the price to stay volatile. We don't want it to just go like this, you know? That's the point. We got a lot of that back here and here. There was a brief one there. There was another one there. We just came out of one. There was sort of one here. Yeah, we want to avoid those flat, boring, low volatility conditions. That's when you sort of like, you get so bored of the market, you just go and do something else. And I would recommend people do other things while the market does its thing, going sideways. Anyway, let me see, where did we get up to? Tried it one day. It saw the hourly pump today. Cool. Price was sideways, but stochastic creeped its way to the floor, very manipulated. Thank you for your opinion, your analysis of the market. You're welcome. It's super volatile in the 15-minute chart. Did a 20% heartbeat pattern. Yeah. It has been very volatile. Let's go to the 15-minute right now. Yeah, look at that. It is. It's like a dum-dum of a heartbeat. From a non-TA perspective, more fundamentally, we are still very much in the muck RE, world debt, and overall economy forecasts. However, the markets can react very different to how the world is going. Yeah, I agree. Like, we're not out of the woods yet, Goldilocks, but I think we're turning a corner of some sort. If I bore everyone with the Forex Factory calendar, I know that I bring this up a lot. Let's go this month. What's the next thing on the calendar? What are we due for? And it is advanced GDP. We had the flash services PMI. That came out 46, so higher than forecast. Forecast actual. So whatever the hell that means. The PMI, the Purchasing Managers Index. Actual greater than forecast is good for currency. Well, currency disagreed because it went down. The DXY went down. So it's not always the case when you get like a positive result off the forecast that you get bullish movement, and vice versa. If you get a negative result, don't expect bull movement or bear, you know what I'm saying. Anyway, advanced GDP. This is a macro thing, right? We know that Q2 and Q3 were negative, so recession-worthy conditions, right? But then Q4 came in at a 2.6%. That's the actual GDP that came in. Now the forecast for this advanced GDP, which is like kind of like a like an early release of GDP. That's coming in with a forecast of 2.6. So if we hit a 2.6, that's optimistic, that's positive, right? That's what we want. We want positive GDP so that we don't go into a recession. We want the US, like every country, we want every country to grow. We want that GDP to go up and be positive. It means we're progressing, the economy's progressing, not stalling or going backwards. Now after that GDP, which is tonight for me at 11:30 p.m., check this website to check your time zone. To change the time zone, click on the little clock up here, time options. And then, yeah, you can find out when this GDP data release is. And then we've got PCE price index month over month, core PCE, on Friday, same time. So 24 hours later, there's another high impact event. Now that basically sees out the month. That's all of January for you of events, right? There's nothing really scheduled for the weekend or Tuesday or Monday, Tuesday. So let's go to next month though. Let's go to February. What have we got next month, February? Straight off the bat, we have the federal funds rate. For me, it's the 2nd of February in the morning. For you guys in the US, it's the 1st of February. So in the afternoon, I think, maybe 2 p.m. And then, yeah, it's full of high impact events, the start of Feb. The 1st, the 2nd, and the 3rd. And the 4th. There's so much going on. The first 4 days of February. It's going to be interesting to see what happens. I'm just going to change it to New York time zone, Eastern. Save. Okay, we'll go back to the calendar. So we are waiting on GDP, which comes out Thursday, 8:30 a.m. So 1 hour before the market opens, we find out what the GDP figure is. So that's tomorrow morning for you guys in the US. Because what are you now, like 6:20 p.m. Wednesday night? So GDP, fairly significant. I think according to this, now this is an advanced GDP reading. Now read this sentence. There are 3 versions of GDP released a month apart: advanced, preliminary, and final. The advanced release is the earliest and thus tends to have the most impact. So this is the high impact GDP figure, guys, that we're getting in less than 12 hours. Or is it, wait, it's about 13 hours away. Yeah. So that's coming up. That could cause another interesting move for Bitcoin. Where are we right now? We're still sort of dancing around that level. We haven't really progressed just yet. We haven't really moved anywhere today, just so far in the first 22 minutes. I'm going to go back to my other layout. So EMA cross Bollinger Bands with the divergence indicator. But I'm going to hide these for a second. And then bring back my price levels and key levels like that. And then what are the things we have in here? Events. Yeah, that's looking all right. Okay. Don't know where that regression trend was. That was, oh yeah, this one here. This was like the bull flag, right? Delete that now. We don't need that. The weekend boxes, yeah, they can help, I suppose. Got our short-term support because of these wicks down here where they touch the bottom. Really nice. So, and obviously we have our recent high that just got set in a matter of hours ago, a couple hours ago. Now this is something that we were staring at for a long time, this big old giant falling wedge. The breakout was so clean, it just took off. Like if you took a position at the breakout, like you you know, you didn't even like expect a pullback, then you'd be up 29.6% on Bitcoin. It's a big deal. Let me scroll out again. What is this? The 4-hour chart. Let's go to the 1-hour chart. So this was the last sort of event type thing. PPI, volatility, right? What was before that? CPI, volatility. Huge rip off the back of that positive CPI result. Remember that? And what else have we had? A funds rate. This was that other CPI that was positive, right? Anticipation, positive. Result, awesome. Pullback initially, but tracked on, kept going up. The funds rate, we sort of pumped into the funds rate decision. I think we capped out at 18,000 something or other. Or, let's see. Let me delete that. Where's the events? Okay, I just need to flash them. All right, so we saw the cap out at 18,347. But yeah, you can see CPI and funds rate are both very, you know, like volatility inducing moments on the chart. CPI funds rate. Let's keep going back. Even this PPI, producer price index, that caused a decent candle with some wicking as well, right? Yeah, decent wick on the bottom of that. Let's keep going back. See if there's any more examples. Big blank part. Okay. Here's PPI. Kinda, yeah, big compared to the surrounding candles. That was, yeah, got a bit of movement off that. It is just a PPI. They don't tend to be as big as the CPI readings. Look at this one, CPI. Really nice candle. Big and bullish. That was that pre or post FTX? That was post FTX CPI coming out. Funds rate decision, dump. People don't like rate rise, you know, interest rate hikes, I guess. Speaking of rate hikes, look at this CPI. Dump into a huge pump. CPI. That was October. Now, I don't know if I have any more listed, but I could go back and plot out all of the different CPI and funds rate. PPI, it's not as amazing, but yeah, look, we have, this is the next big thing, the funds rate, and then we've got CPI again. So let me grab a line for that. When is that next CPI? So we've got January. Let's go February. Now this is American time zone. Let me go back to Brisbane, Australia. Go back to the calendar, go next month, and we've got CPI on the 14th of February, which I believe, is that Valentine's Day? I don't know. I'm not good with Valentine's Day. I can't remember the date, but it's something like that. 14th of Feb, CPI, 11:30 p.m. 14th of Feb. So there's still a bit of time before then, but I'm going to see if I can capture it on the 15-minute. Is it going to give me dates that far into the future? No, it's not. Damn. Okay. Never mind. So if I go to the hourly though, it's going to let me do it. 14th. There we go. 14th at... Is it going to give me 23? Yeah, it is. Okay, cool. 14th of Feb. 2300 hours. Okay, let's get a vertical line going. I'm just going to copy this one, duplicate it, so that we know where the next CPI is. We'll lock that back in. Drag this over to 14th at 2300. There. Okay, lock. All right. So if we go, let me click on that. If we open up, expand the events here, I have to come up with a name for this one. CPI Feb 23. And that lives where? Down here. Going down the list, we've got October, November, December, January, February. Okay, cool. Keeping it all nice and OCD. Let's hide all the other things except for CPIs. I just want to see the timing. Let's see if they're coming in at the right, like, you know, similar intervals. If we go out to the 4 hour, yeah, okay. It seems to be roughly similar intervals, right? Go on the daily, you can see CPI. There is a point where I think they take a break on reporting CPI. It doesn't come out every month. Like if we go the year here, let's check. So starting in a January, February, March, April, May, June, July, August, September, October, November. Oh no, they do. They do come out monthly. Yeah. So I think it's the rate decision. So the interest rates take a break at some point. Let me just see which month it is that they don't put out a funds rate. Because they almost come in every month, but not quite. So here's a January. So there is no funds rate on February of this year. It's January, March, April, June, July, September, November, December. And then last year it was Jan, March, May, June, July, September, November, December. So yeah, so some months don't have it while others do. See, we didn't have a January funds rate decision this year because it's coming out at the very beginning of February. So yeah, but yeah, there's a little bit of a difference there. CPI though, we can count on CPI coming out roughly the same time every month. So, and we know that CPI tends to move the market the biggest, at least lately, compared to any other kind of event. All right, I'm going to turn all these back on. I don't know if this works for you guys, but like, let me see if I can copy a link to this chart, and then you might be able to get all of this information to, like, you know, click through and follow, because I've got key levels in here. I've got the price levels, I've got resistances, I've got the yearly open, low, high, and close marked out for each year, or all the ones that matter at the moment. So yeah, let me see if I can get that copied for you. What's this? Manage layout drawings. Interesting. Okay. There's a few like functions that are now open to me in TradingView because of the Pro version. Now, where's the share button? How do I share this with you guys? Is it literally just the hyperlink up here? Tell me if that works for you guys. Oh, Serrano is in the chat. What's up, Serrano? Or is it... Oh, it works for you? You got all this? You got all this business? Like all of the notes and everything? Well, that's cool. It should be read-only. I'm missing a dotted line here. Wonder where it went. Let me duplicate this one. Oops. There. Needs to be 21,500. Okay, lock that in. Cool. Don't forget you can set up your chart layouts too now. Yeah, that's it. So instead of me having like a whole bunch of folders that I turn off and on, I can have just layouts that I can click. Scott says, holy cow, I see you have over $80 million just in Doge. Well, what do you mean? I wish I did. That would be great. Is he talking to someone else? I don't know who you're talking to. Honda, thanks man. Have a good one. Thanks for stopping in and checking the stream out. Appreciate it. Let me go down to like the 5 minute. We haven't really like taken off yet, have we? We're sort of still kicking around in an area, waiting to see if we get, you know, some movement to the upside. Got our recent short-term support from back here. That's why I have this marked out. It's the support we had from the weekend, 22,292. So basically that 2. All the twos. I see that as a fairly key level to hold. We want to maintain that level to stay trendy, right? We want to stay on this trend, but we may lose it. We'll see. We'll see. Even if we do lose it, I don't think it's the end of the game. But yeah, nice trend, huh? What did the DXY do? It did nothing. It just, at least, you know, it's down low, which is cool. And it's the point is it's not doing this. It's not rallying up, which is what we want to see. We want to see it stay suppressed. We want it to go down. Now, what else do we have going on? We've got the SPY. The SPY closed not that long ago. And check out what it achieved in yesterday, basically today's trading. 7 hours, I believe it is. Yes, or 6 hours. Something like that. 6 or 7 hours, right? Huge gap at open. Was left open, right? And then price reclaimed that gap and then some. Like it came up and did more than just fill the gap. It's, you know, in the last 5 minutes, we had this beautiful solid green candle that popped up. Look where post is. Post market is basically at the highs of the prior day, right? We haven't quite achieved the highs from back here, but look, maybe that's a mission for Thursday. Because today's Thursday for me already, but you guys are Wednesday night, so Thursday will be starting up in a matter of hours, and we'll see what we can pull off. If the S&P and every other like sort of stock market index travels upward, that should have a positive effect for crypto, and I think Bitcoin will follow suit. But just look at the correlation. Like, let me go the futures one, because that gives us a few more candles to use. But I'm going to go 15-minute futures for the S&P, and I'm going to split the screen because I can do that now. And I want to get, so we've got futures on this side, 15-minute chart. And then I'm going to put Bitcoin on this side, 15-minute chart. 15-minute. Okay. see if we can find correlation. Let's maybe try the 1 hour. Do these look similar? Let me get rid of these squiggles. So through this period, downtrend, like massive pullback, massive negativity in the S&P, right? We got the same thing on Bitcoin, pullback, negativity, like, you know, selling, huge pressure to the upside. Bitcoin, huge pressure to the upside. So right now, there is no up or down right now on the futures, the S&P futures at the moment. It's kind of just sitting flat. However, Bitcoin did this huge rejection and pullback. So it gave that whole move back, basically. But hey, at least we're now above 23K. So there's a little bit of progress that is sticking, because we came from down here 22.3 basically, or 22.4-ish. You know, those lows. So you know that big old fat position that I'm in on Bitcoin? That came up into profit briefly, but I didn't sell it yet. I'm still optimistic, and I want to see like some further evidence before I think that we're going down big time. I haven't seen that just yet. You know, we are hanging. You know, we're still macro higher lows. By no means have we crashed out. So I'm not worried just yet. It'd be nice to see us come up and test the August high. That's what I'm kind of aiming for as like a big resistance. I think, you know, we're very close. We're not far off. Just another like $1,000 or so on price. But yeah, you can see the pain I went through of seeing my position come and go. Let me turn my position on. There's my position. I managed to get it back down to 23,635, my Bitcoin position. So for about, let's see, I had my head above water for how many minutes? Like there was 3 minutes here where it was wicking above, but then yeah, I was above water for 9 minutes. 9 minutes, guys. I've been underwater for like 9 months, so 9 minutes up is not getting me excited to sell. I want more than that. I've been in it for so long, like it's just ridiculous. I should, you know what I regret? Not buying more down here. Not buying and improving my overall position by ignoring this opportunity down here. You know why? Because I thought, like a lot of other people, I thought maybe there was potential for a leg down to 14K, you know? 14 would have been cool. And that's where I was like, yep, cool, I'm gonna buy if we get down to 14. And that'll improve my position to like somewhere at the halfway point, like say like, you know, 18K, you know, something like that. But anyway, that's the way the cookie crumbles. If we pull back again dramatically, then I will buy the dip. I won't be stupid like and watch it pass me by this time. And I think a lot of people probably have that same mentality this time around. Like, you know, this pullback got bought up pretty quick. Like, let's go to the 1 minute. So this massive bloodshed here got bought. Like, look at all those wicks on the bottom side. That shows interest in buying, and you know, it's already propped the price back up over 23K. So yeah, every dip seems to be getting bought, and that's why we've sort of maintained support. You know, plain and simple. You know, a lot of people are calling this whole thing like a big manipulation, that it's all false, and that it's purely a stop hunt or like a short squeeze. I kind of beg to differ. I think it's off the back of inflation coming down and interest rates starting to cool a little. You know, they're still high, they're still hawkish, but they have come back. So yeah, I'm quietly optimistic still. Well, I'm loudly optimistic now that I'm telling everyone about it. Yeah, so that's it, guys. I'm not going to bother looking at alts, sorry. I'll let you guys do that yourselves, but I'm sure that they're having a good day. I'll look at the watch list. Yeah, there's some things that are green, there's some things that are red, so it's a bit of a mix. But GMT's up, Magic is up, Cell, SFP, Coty, Miner, SXP. Yeah, you get yourself a watch list, have a look, check out what's popping, and be careful with your trades. Don't get stuck. Don't FOMO, like look for a setup, like be patient. Don't jump into something just because it's ripping up, because you could get stuck. Having said that, no financial advice. Do whatever you like. You know, do you. These are just my opinions. So, you know, do with those what you please. But at the end of the day, the responsibility is yours for what you do in the markets. Okay. All right. That's pretty much it, guys. Thanks again for tuning in, and I will catch you possibly a lot earlier tomorrow because I do have to go to work tomorrow morning. So the stream's going to be probably like a good hour or an hour and a half earlier than usual. So I'm not going to catch the daily close. I'll have to be out of here before that. So we're going to just talk about, you know, how the S&P went for Thursday and, you know, how Bitcoin reacted to that, how crypto reacted to that. So yeah, tune in tomorrow. I'll catch you then. And have a good night. Have a good day. Peace.